Good evening, everyone. I'm sorry for the delay. Actually, I was stuck somewhere. Okay, let's get started. So, in the last classes, we have already completed two acts. Okay, we have completed the Sale of Goods Act and also we have completed the Indian Contract Act 1872. Today, a very interesting topic again. The name of our topic is Partnership Act. The name of our topic is Partnership Act. Please open page number 179 of your module. Page number 179 of your module. We are starting Partnership Act 1932 and LLP, that is Limited Liability Partnership Act 2008. In coming classes, we'll be discussing everything regarding partnership. Okay. Before 1932, this act came into force on 1932. But before that, all the provisions related to the partnership, like all the contracts between partnership, were governed by the Indian Contract Act. Likewise, we were discussing in the first class, we were discussing about the Indian Contract Act, right? So I told you already that this act was divided into four different parts. Okay, so the last part of the act was the last section. The last sections were related to the contracts relating to the partnership. In 1932, in 1932, the provisions of that sections were separated from the Indian Contract Act and a new act was formed, and the name of the act was the Indian Partnership Act 1932. So you might have already heard about in your 12th class or somewhere about partnership. Okay, so let's discuss what a partnership is. I'm again repeating, I'm on page number 179. Open your modules, page number 179, study note 4, Indian Partnership Act 1932. I hope everybody has opened the module. Okay, so on day one, when we started our class, I already told you that whenever we are starting a new act, just we have to make sure that when this act was made, that is when the provisions of this act came into force. So this act came into force on 8th of October 1932. This act came into force on 8th day of October 1932. So on 1st October, what happened was, before that, all the provisions, all the contracts related to partnership, either making of partnership, either amalgamation, etc., all these terms we'll be discussing in future, so don't worry. Okay, so all these contracts were the part of Indian Contract Act 1872, but later on in 1932 the act got separated. The provisions of those sections were separated from that act and a new act was formed, that was Partnership Act. This act came into the force on 1st day of October 1932. Okay. Later, in earlier time, this act was applicable on whole of the country excluding the state of Jammu and Kashmir. Okay, but now in today's scenario, this act is applicable on the entire country, including the state of Jammu and Kashmir. Now Jammu and Kashmir is not excluded. Okay, the provisions of this act is applicable in similar manner in each and every state of the country, whether it's Jammu and Kashmir, whether it's Mumbai, whether it's Tamil Nadu, Kerala, everywhere the act is applicable equally. Okay, so this is the basic part that what when this act came into force. So the date of enforcement is 1st day of October 1932. Why I'm repeating again and again? So that you don't forget the dates, because we have already studied 3 acts. So you have to mesmerize each and every date, at least the starting date of each and every act you should have to you'll have to learn, because this will be the basic questions. This 100% any one of the act will be asked in your examinations. Okay, so just make sure you don't confuse the dates. Okay, so now let's discuss what a partnership is. Okay, so when two or more persons are uh, coming together, together to do some business activity, to share profits, to share losses, etc., then we say that there is a partnership agreement. There is a partnership agreement. So the definition of partnership says that it is a mutual agreement between two or more persons. It is a mutual agreement between two or more persons. Means that whenever there are two or more persons, just make sure the minimum number of partners in a partnership firm is two. The minimum number of partners in a partnership firm is two. If there is only one person, then it will not be a partnership firm, because we are talking about partnership. So for partnership, you need two, or you require two or more persons. So the first and foremost line of the definition says that the partnership is a mutual agreement between two or more persons. Okay, so this is a mutual agreement. The meaning of the term mutual agreement means that both the parties, two, three, four, how many parties, it depends. All the parties are mutually agreeing on the same thing. Mutually agreeing on the same thing. Like for example, me and my friend, we are starting a business. We are starting a business to sell cell phones. Okay, we are starting a business to sell phones. So here we both have agreed upon the same thing, that yes, we'll be selling phones, we'll be doing this, we'll be doing that. Okay, so here there is a mutual agreement, that is both the parties are agreeing. Now for example, if I want to sell phones but my friend want to sell refrigerators, then in that case there will be no partnership, because there is no mutual agreement. So remember one thing, the first and foremost thing that is required in a partnership is mutual agreement. Mutual agreement is very necessary. If there is no mutual agreement, then there will be no valid partnership, because it is a mutual agency. There are many people included in partnership firm. So if they are not mutually agreeing on the same thing, then there will be disputes, right? And if there will be disputes, then the business will not run smoothly. So it is very important that all the decisions are always taken unanimously. Now there in partnership organization, there is no majority. All the decisions are taken unanimously. The meaning of unanimously means that all should agree on the same thing. Not if a single person is denying, like for example, there are 10 partners, 9 are agreeing on something and one person is not agreeing on that thing, then there will be no such decision taken, because there is a mutual agreement. That is all the person included, all the people included in this firm shall agree on the same thing. So partnership is when two or more people come together, there is a mutual agreement. There's a mutual agreement, then they share the profits of the firm equally. Listen, now the provision regarding profit says that if there is any said ratio, then you'll have to distribute the profits according to that ratio. But if there is no ratio, like for example, me and my friend started a partnership together. Now here we have decided that we'll share the profits 50-50. We'll share the profits 50-50. Then in that case, because the ratio has been decided between us, then the ratio of the profit will be 50-50, 40-60, whatever the ratio is. Okay. But for example, we did not had any provision regarding profit sharing. Then in that case, here, if there is no provision, if we haven't decided that what share of profit will be sharing among each other, then there will be a equal sharing of profits. There will be a equal sharing. So if somebody asks you that what is the profit sharing ratio in a partnership firm, then answer will be, if there is any decided ratio amongst the partners, then the profits will be shared in the said ratio. That is whatever it is decided by the partners. But if there is no distribution criteria for sharing profits, then in that case the act says that if there is no distribution criteria, then the profits will be shared equally. Okay, so now let's move to the definition part. The definition of the Partnership Act is given in Section 4, Para 1. Section 4, Para 1 of Indian Partnership Act 1932. It says that partnership is the relation between persons. Partnership is a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. All the above lines we have discussed, but there is one new line in the definition, that is carried on by all or any one acting for all. The meaning of this line is whenever a partnership firm is formed, it is not necessary that all the partners are working partners. Like for example, there's a partnership firm. There are 5 partners in this firm. Okay, so it is not necessary that all the 5 partners are giving their are contributing something, that they are working, they are somebody selling, somebody is producing, somebody is marketing, etc. It is not necessary. If any one partner is working and all the other have just contributed their capital, that is just given their money, then also it will be known as partnership firm. We cannot say that all the partners are not working, so it will not be a partnership firm. No, if any of the partner, if even one partner is working, then also it will be a partnership firm only. So that is why we say that in a partnership firm, either all the partners can work, or any one partner can work on behalf of all the partners. It is not necessary that all the partners are working. So the definition is very clear that it is a mutual agreement. It is a mutual agreement between 2 or more people. Okay, where a partner who have agreed to share profits equally or in the said ratio, and any one partner acting for all or all the partners are working. So these are the key points of the definition. If you do not remember the definitions as it is given in the section 4, then you will have to remember the keywords. The keywords here is, first is mutual agreement, second is profit sharing, and third is one acting for all or all acting together. Okay, so these 3 are keywords you have to remember. If you remember these 3 words, then you'll not face any problem writing the definition on your own. Because if you are writing the definition which is given in the section, then you'll have to write each and every word as it is given in the section. But if you want, if you forget something, then just you can write in your own words. And if you're writing in your own words, then these 3 keywords are very necessary. Your definition, if you're writing in your own words, your definition must consist these 3 words. Okay, so I hope everything is clear till now. Any doubt till here, or shall we move ahead? Okay, let's move ahead. Now, the maximum limit, the minimum limit in a partnership firm is 2. There must not be any partner less than, the number should not be less than 2. The maximum limit in a partnership firm, if there is a banking firm, if there is a banking company, then the maximum number of partners are 10. A banking company shall not exceed 10 partners. Okay, other than banking companies, if there is any other company, if there is any other partnership firm, the maximum number of partner is 50. The maximum number of partners is 50. Earlier the limit was 20. Okay, earlier only maximum 20 partners were allowed in a partnership firm, but now this limit has been amended and now the limit has been changed to 50. In your books, in your modules, it is still given 20, but now these numbers have been changed. Now the maximum limit of partners is 50. So we have discussed 3 things. One is when this act came into the force. Second is the definition of partnership, and third is the limit. Okay, so the minimum limit of partners is 2 and the maximum limit is If there is a banking company, then the maximum limit is 10. And if there is any other company other than a banking company, then the maximum limit is 50. Again, I'm repeating, in your modules, it is given 20. Again, if you'll read it, then don't think that I have taught something wrong. But if you'll Google it, you'll know it that this limit has been amended. And now the upper limit of partners is 50. Okay. Now let us discuss the characteristics of a partnership firm. One by one, we'll be discussing the characteristics, the essentials. Like if you want to form a partnership firm, then you have to stick to these characteristics. If any of the characteristic is failing, if you are not able to follow any one characteristics, then your partnership will not be a valid partnership. Just like we have studied in Contract Act that a valid contract should have all the essentials. If any one essential was missing, then it will be a void contract. Similarly, here also we'll be studying the essentials of a partnership, the characteristics of a partnership firm. A partnership firm should have all these characteristics. It is very important. So one by one we'll be discussing. First, it is association of two or more persons. If you're making a partnership, if you want to make a partnership, you'll have to make sure that there are 2 person or more than 2 person. If there is only 1 person, then it will never be known as a partnership firm. Why? Because the meaning of partnership is only mutual agreement between 2 or more person, right? So it is very necessary that there must be 2 or more people. Again, I'm telling you, maximum number of people is 10 in case of banking company and 50 in case of other partnership businesses. Second essential element is agreement between two parties. Whenever you are making a partnership firm, you'll have to make sure that there is an agreement between the parties. If there is no agreement, like we haven't decided that how we'll be sharing the profits, what will be the works of the partnership, what will be the name of the partnership, who will be the partners, etc. If we haven't discussed this, if we haven't made any agreement, then there will be no partnership firm. Now, this agreement need not be in return. Okay, this is optional for a partnership firm. If all the partners want to make this agreement in writing, they can, but it can be oral also. But return is given more priority, because if there is any dispute, if there is any misunderstanding between the partners, then return document and registered document will be considered more evident. Okay, so you'll have to agreement is the understanding between all the partners. Okay, like whosoever will be the partners. The content of the agreement will be discussing in future classes also. One complete topic is related to agreement only. Okay, so in brief, I'm telling you right now that agreement consists of different criterias, like what will be the limit of the partners, what will be the type of business, what will be the liability of the partners, what will be the profit sharing of the partners, etc. So these basic understandings between the partnership is known between the partners is known as the partnership agreement. So it is necessary that whenever you are making a partnership firm, you'll have to make an agreement, either oral or written. It is up to you. But to make it a better proof, to make it a better evidence, you make sure that this agreement, you make it in writing and you get it registered. Okay, because it will act as a very solid proof in future if there is any dispute. So second essential element is it must have an agreement. Third, it is lawful business. Whenever you are entering into a partnership business, you'll have to make sure that the business you are including must be lawful. That is anything which is not forbidden by IPC. Okay, if you are entering into business for killing someone, if you are entering into business to share transfer drugs from one person to another, then all these unlawful activities will not constitute a partnership firm. Like for example, A, B and C, three partners formed a partnership firm, and they started doing business for example, drugs, for selling some illegal drugs. So here this partnership will not be a valid partnership. Yes, we can say that there are more than two people, there is an agreement, there is everything, but the business they are carrying on is not a valid business, it's not a legal business. So whenever you want to make a partnership firm, you'll have to make sure that the purpose of the firm, the business you are doing in the firm, that must be lawful. If you are indulging in any unlawful activities, any illegal activities, then it will not be a valid partnership firm. So make sure whenever a partnership firm is formed, then the business committed by all the partners shall be lawful. If it is lawful, if it is unlawful, illegal, forbidden by court, forbidden by IPC, then in that case, there will be no valid partnership firm. Fourth is sharing of profits. Sharing of profits is also a very essential part of a partnership business. Sharing of profits is like if it depends on the partners. It depends on the partners. No such provision is there in the act that you'll have to share in this ratio, that ratio. No. The ratio of sharing profits can be decided by the partners themselves. Like for example, there are three partners A, B and C, and they have decided to share profit in the ratio 30, 40 and 30. Okay, so here they will share ratio in this. Now, if they fail to share to decide the ratio, that in what ratio they'll be sharing the profits, then in that case, the law says that if you are unable to decide the ratio amongst yourself, that what will be the profit sharing ratio between you, then you can share the profits equally. Now, for example, if A, B and C have failed to calculate the ratio, are unable to come on a point that at what point we will be sharing, at what ratio we will be sharing the profits, then in that case, all the three partners will be sharing profits in an equal ratio. Like for example, if there is a profit of 300 rupees, then A, B and C each will have a share of rupees 100. Okay, so the profit sharing says that it depends upon the mutual agreement of the partners. Okay, whatever the partners decides among themselves, that will be the profit sharing ratio. And if the partners fail to decide the ratio, then in that case they can share equal shares of profit. Okay, next it is mutual agency. Now, when I started this chapter, I told you that partnership is a mutual agreement. Similarly, it is a mutual agency. Mutual agency means that here each partner is the agent of another. Here each partner is the agent of another. Each partner will be acting on behalf of the other partners. Like for example, again, A, B and C, three partners started a partnership firm. Here A will be the agent of B, B will be the agent of C, C will be the agent of A, likewise. Okay, so here all the partners, like for example, if you want to make a business deal, and at that time only B was present, and A and C were out of the town, so they weren't available at that time, and the deal was very important. So here B made the deal, and then in that case we cannot say that because there was no mutual decision between the partners, so it will not be a valid deal. No, because there must be a mutual agreement, there must be a mutual decision. But if any of the partner is taking some decision for the betterment of partnership firm, he can take that. Because each and every partner is an agent of another. Now here, because B is cracking the entire deal, then B is working as an agent of A and C. Okay, so there is a mutual agency. Each and every partner is an agent of another. Okay, so here in a partnership firm, just like a mutual agreement, it is mutual agency is also present. Next, the next characteristics of partnership firm is there is unlimited liability. Unlimited liability means that each and every partner shares a unlimited liability. That is, if the assets of the partnership firm are not enough to meet the liabilities, then in that case, even the personal liability, even the personal property of the partners can be included. Like for example, A, B, and C started the partnership firm. Here, the partner, this firm was going into losses, was going into losses. Now the assets of the firm was rupees 1 crore. The assets of the firm was rupees 1 crore, but the liability of the firm exceeded to 1 crore 50 lakhs. Now here, now the assets of this firm is not enough to meet the liabilities. The liabilities are exceeding. Okay, there is a if all the assets are sold, then also 50 lakhs will not be covered. So that does not mean that 50 lakhs is gone. Now there will be no recovery for this 50 lakh. This 50 lakh will be recovered from the personal property of A, B, and C. Like for example, if A is having complete personal property in his name worth rupees 1 crore, similarly B and C also having that, then in that case, proportionately from their personal property, some amount will be taken and this 50 lakh loss will be covered from that. Okay, if we are talking about company, then in that case, there is no unlimited liability. If a company becomes insolvent, the owner of the company is not treated as a, his personal property will not be taken into custody. But when we talk about partnership, just remember the liability of a partnership is always unlimited. That is, in case of any loss, in case of any unforeseen condition, if the assets of the firm is not enough to meet the liabilities of the firm, then in that case, personal property of each and every partner will be responsible. Personal property of each and every partner will be responsible. So next important characteristic of a partnership firm is there is an unlimited liability. Next is utmost good faith. Whenever you're making a partnership firm, each and every partner should have faith amongst themselves. Faith amongst themselves. If there is no faith, like if I don't trust my partner, then there will be chaos. They will not be able to run smoothly. You have to maintain that faith. You'll have to maintain that trust. Okay. If you are doing something against the partnership, against the partners, if you are deceiving the other partners, then in that case, the basic rule of partnership will be failed. Okay, so whenever you are entering into a partnership firm, then you'll have to make sure that you there is a mutual agent. Sorry, there is utmost good faith. That is, all the partners trust each other. Next is restriction on transfer of interest. Whenever there is a partnership firm, a partner cannot transfer its interest to another one. The meaning of this line is, for example, A, B, and C. Okay, now C does not want to be the partner anymore in this firm, but C's relatives are in relative is interested in this partnership firm. So here C cannot transfer this partnership to his relative. Okay, but if you want to do so, he'll have to take permission from A and B. If A and B both are agreeing on it, if A and B both are agreeing on it, that okay, if C is not interested in our partner and if his relative is interested, then make sure that his relative join on behalf of C. But if the limit is, sorry, you'll have to make sure that there is a unanimous decision. There is a unanimous decision. No priority basis included. No majority basis is included here. Okay. All the partners must agree upon that yes, he can transfer his interest or not. Generally, the rule says that a single partner cannot transfer his interest to some other person, any legal heir or any other partner. Okay, if we want to do so, then he'll have to take permission from each and every partner. Each and every partner, if they say yes, okay, you can do this, then only he has a right to transfer his interest. But in other cases, if any one partner is denying to it, then also he'll not be able to share the interest. So these are some essential characteristics which are required to form a partnership firm. If any of the characteristics is failing, then there will be no valid partnership firm. There are many situations where you can say that people, there is a mutual agreement, people are sharing profit and losses, but yet it is not a partnership firm. Just like have you ever heard about the term joint Hindu undivided family, HUF? Okay, I hope in 12th standard in some BST chapter or something you might have studied about this topic. Okay, so HUF also seems like a partnership firm because there also all the members of the family, all the members of a Hindu family comes together and do a business, and they share profits, losses, etc. in above said ratio or in their equal ratio, whatever the case may be. But still there will be no partnership firm because all the characteristics, all these 8 characteristics that we have studied are not fulfilled there. In a Hindu undivided family, each and every decision is not taken unanimously, is not taken by consulting each and every partner. There, the decision will be taken by the karta of the family. That is, the head of the family has the deciding power, that all the decisions will be taken by that single person. Okay, but here in a partnership firm, all the decisions are not taken by a single person. All the decisions will be taken by mutual consent of all the partners. Okay, only any one of them cannot take an individual decision. So many terms seems like a partnership firms, but they are not. Biggest example is HUF. HUF is just similar like a partnership firm, but it is not a partnership firm because it has a complete different criteria. I hope everything is clear till now. Any doubt till here? Just write yes or no so that we can move ahead. Okay, so that's all for today. The next topic is a quite lengthy one, so I'll not be starting today because we're having only 15 minutes. Okay, so we'll discuss this topic in the next class, that is day after. Okay, if you have any doubts still here, HUF is a completely different concept. Okay, the full form of HUF is Hindu Undivided Family, where each and every member of a Hindu family are doing business. Like in our ancestors used to do business together, like our uncles, our fathers, etc. If all were doing a similar business, then that business is known as HUF. That business is known as HUF. In a HUF, the decision making power is with Karta, that is the head of the family. For example, your grandparents, your father, your uncles, your sisters, etc. All of them are combinedly doing a business. So if all the members of the family are doing a common business, then that is known as a HUF. Okay, but here the decision making power will be with the head of the family, that is your grandfather. All the decisions will be taken by the grandfather. If you are not having any grandfather, then the eldest brother of your father, even if your father or your uncle, whosoever is the eldest brother, will be known as karta. Karta is the head of the family. All the decision making powers are with the head of the family. So this is a concept of HUF. This is not in your course, just for a general knowledge I discussed this down. Anything else? Those who have any doubts can ask me here. Those who don't have any doubts can just leave the class. Okay. Is it clear what an HUF is? You're welcome. Okay, thank you everyone.